What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're talking about a little company you might have heard of. They make phones or something. Got a funny name, though. It's called Apple. Ticker AAPL. Now, we've got, man, what do we've got? We've got a lot of new faces, man. Let me tell you. Pretty good Baba show yesterday. That reminds me, I forgot to put up on my Internet Explorer. Pretty good Alibaba show yesterday. We went long, man. It was like an hour. I was fired up. I had that Cafe Robusto in me. And we bumped some Tiesto. And this morning, I mean, everything looked good. I mean, even on Yahoo Finance, it's like, oh, Baba pops and all this stuff. And then now they're starting to retrace a little bit. So that's a little frustrating. Your boy is struggling a little bit today. I don't know what's going on, man. I feel like, can you get headaches from allergies? Because I feel like that's happening to me. Look at form factor, of course you would be. Anyway, I don't know, man. Ever since moving to the swamp here, it's been tough. It's been tough. I'm getting HAIQ questions. I want to go to the HAIQ headquarters and just backhand their management staff. Dave, I think it's time to give up. We gave them plenty of time. I don't know, man. This is... They beat... I mean, the numbers were good. Earnings numbers were good and everything. I don't know what's going on. This place is... Investors are not convinced. Let's put it that way. And I think management's still dropping the ball out there. So that's my HAIQ. So yeah, dump. Forget about it. Just. I thought HAIQ would be back to 35 by the end of the year, and now I just want to beat up everybody in their corporate boardroom. Yeah, right? Just give them a nice little knock. Just go say hello. Anywho. What's up, Kurt? Trevor? Wild Bill. There he is. Jack, how you doing? Greg? Welcome. David, as always. Michael, Bruno. Yvonne. What's up? All right. We're going to talk, I mean, this Alibaba thing, I mean, this is incredible. Get the big gap up, right? Big gap up, rope-a-dope, my friends. That's what that is. You know when I talk about these rope-a-dopes? Those are these stop grabbers. At the open, they got a little stop grabber. It means the guys that were short try to grab their stops, and they try to get everybody that's chasing breakouts here, and then they push them back down. That's what's happening over there. This is going to whip around today. Yeah, it did. Totally. You know why, guys? Look, it's not rocket science. You want to know why these guys are down? Look at the NASDAQ. You're not going to, if the NASDAQ's coming under pressure here, it's going to be hard for the rest of the market just to ignore it. Now, here's the thing. It's early on, okay? It's early in the session. We're gonna touch on this a little bit later on in the chat room and such. But yeah, they faded it early. I think a little bit of patience is going to pay off here with Baba. And again, guys, that's why we go out a week and a half, 2 weeks, 3 weeks, sometimes 6 weeks on these, right? It's not a one-day option because sometimes market forces, NASDAQ selling off, will overpower the individual stock. Alibaba having a great report, right? So that's kind of what's happened initially. It's early on in the trading day. Let's see what happens. But that's why I go out a week, 2 weeks. You put a little time in these options trades so that you give the market a chance to kind of work itself around. All right? Okay. Now, let's close the rear view mirror for a hot second. And let's start talking about Apple, okay? Let's kick it off like we always do with the price consensus and EPS surprise chart here on Zacks.com. Black line is the price, which corresponds to the right y-axis. The green arrows, earnings beats. Red arrows, earnings misses. There's been a couple of them. It's been a couple. Okay. These multicolored lines represent the evolution of our Zacks consensus estimates over time. So when you see this little gap in between them, that's earnings growth. When you see these ticking up, that's estimates going to the upside. So these are all good things. And here you can see why stocks do what they do, right? They move along with earnings. That's why we're here at Zacks, because we're like, hey, I think there's something to this whole earnings thing, right? So here we can see the trough into mid-2013, put shares under pressure. And then we started ticking up, moving in the positive direction as these earnings estimates started to move up in the positive direction. Then you get a bit of a retrace, and then all of a sudden we're stepping up off to the upside again. Okay, so moves to the upside, good stuff going, moving in the positive direction. Okay, now this is something that should jump out at you. So let's just look at this year. So here's the 2017 estimates. Kind of leveled off, kind of ticked just a little bit, so not too much, right? But as these 2017 estimates have leveled off, 2018 has gotten increasingly more attractive throughout the course of pretty much the whole entire year. And you could see that the price reacted also to those estimates going to the upside, right? And, you know, this obviously isn't the technical chart that we use, but you can already start to see that trend develop along with these 2018 estimates. So I'm going to go out on a limb and say that this market is increasingly interested in the 2018 numbers, not so much what's going on in 2017, okay? Of course, that's what we do. It's all about guidance, right? They're always looking out, always looking forward, what's going on in the future, that kind of thing. So what have we gleaned from this price consensus and EPS surprise chart? High likelihood of a beat, although it's going to be small. Beat and a small beat. And there you go. Bill, sure. Can you remind me at the end? At the end, I'll take a couple questions, and we'll go on that. But I want to try not to get too off track, because you know I love my tangents, Bill. Loving those tangents. So yeah, we'll get to that at the end. What else? What else on Apple here? That's all we can get from here. Okay. And again, guys, if you're not already hooked up, if you didn't get the email letting you know what this was going on today, shoot me those emails, livetrader@zacks.com. I'll get you on the distribution list. Then, of course, you got to come and kick it in the chat room. That's on Discord, and that's going to pop up over here eventually too. Okay, so hang out either way. All right, so that's all we can get from there. Now let's look at the detailed estimates page on Zacks. Zacks rank number 3 hold. I mean, it's always a Zacks rank number 3 hold. Maybe not always a hold, but oftentimes it's a hold, because it's just such a big company. It's hard for these analysts to really get out there and make moves in one direction or the other. This is the funny part too, right? We've got it in our mini computers industry. I mean, come on. Ignore the Zacks industry rank on this one, okay? That's all. Now, guys, we're going to get this at the end of the day today. So all you got is today to decide if it's something you want to trade ahead of earnings. But really, you know, this analysis is supposed to be, do you want to be a longer-term shareholder of Apple? That's what we're trying to figure out here, but we give you some options, ideas, in case something is jumping off of the page and looks like we can make a few bucks. Revenues. That's what the sales estimate side is. Current quarter looks like 9.2% revenue growth year over year for this quarter. Next quarter is going to slow. It's going to go to 6.32. Current year numbers, 227.64 billion. Next year, 15% revenue growth, okay? Now, I'm always clowning companies, right? because they're like, well, this year I don't know, but next year, that's where it's at, right? Now, this is a little different though, because you got these phone cycles, right? You got your cycles, so they're gonna make a bunch of money when a new thing comes out, right? And then they're not gonna make so much money as it's waiting, and then there'll be the iPhone 9 and then 10, and then all the Apple fanboys will buy something, and then it'll just keep on going. I was at the Porsche dealership the other day, and the salesman told me that 90% of 911 owners have an iPhone, which I thought was pretty interesting. But it's the cult, man. You start buying these Apple products, you keep on buying them. Of course, I'm guilty on the Samsung side, so what can I say? All right, so let's look at the EPS. 12% EPS growth for the current quarter. 12% for next quarter. Current year looks like 8.42. Next year, my friends. Next year is where it's at. 21.75% EPS growth on 15% revenue growth. And again, what's it all about? It's all about the cycle. The next part of the cycle. Okay? And with this quarter sort of closing this out, I think these eyeballs are going to be on next year. All right, now let's look at the agreement between these analysts. Okay? So, current quarter, over the course of the last 60 days, you got 4 up, 4 down. You got a 2 down, 4 up, 6 up, 4 down for the current year. But next year is really where the optimism is, with 6 analysts increasing their estimates for next year over the course of the last 60 days, and a lone analyst dropping their number. But it's important to note, this lone analyst, like, this just happened. Over the course of the last week, somebody's come out and be like, Apple is getting rotten. Maybe not rotten, but they've dropped their estimates a little bit. Now, what's the overall effect to our Zach's consensus estimate been? 187 on the current quarter, man. Nothing. Just sideways. Next quarter, 366 up to 377. So, a little bit of growth. A little bit of growth in next quarter. Current year numbers, 901s across the board. Next year, 78, 74, 1102, and then they said, okay, well, maybe we got a little carried away at 1102. Let's drop it a nickel, which is comical to me when they do this, by the way. Right? Think about that. Let that marinate. So you're talking about on 1102, right? You're going to drop a nickel on 1102, all right? So you really, 45 bips. I'm sorry, not even a point. No, it's 4 or 5 bips because we're in percentages here. 45 bips. I mean, really? Really? So let's just inch it. Let's just push it along a little bit, right? I mean, way to be bold, buddy. Really putting it out there. I wonder who that was. KeyBank. That's right. I'm calling you out. This had to be you, unless it was this guy. Not identified. I said it dropped, didn't I, for next year? Yeah, this must have been this guy. Whatever. Anyway, consensus didn't get hit much. It is what it is. So the consensus dropped 45 bips. That's right. Okay. All right. So they dropped a little bit. Okay. Charts. Charts and charts and charts and charts. It's been pretty darn good. Now, I pointed out on the price consensus EPS surprise chart that this was going to look like this, right? But we knew this was going to happen. So we don't even need to go back too much further than this. This is that good old golden cross I keep telling everybody about, which, it's a function of mathematics is why it works sometimes. It's by no means a reason to initiate, I don't believe, but whatever. It's the 200-day down here. Last time Apple got into the 200-day was just before Election Day. Remember those Election Day lows? Everybody, we were freaking out. And then off to the races it's been since then. Interaction with the 50-day, though, has come down below the 50-day for a month and a half, 2 months. So it does have a tendency to do that, where it'll come and hang out under the 50-day for a little bit. What's a little bit concerning, just a little bit, is that you're beginning to get convergence here between the 500. I'm sorry, the 50 and the 200. 500. Can you imagine 500-day moving average? Like, let's go way back. But you can see how this is beginning to converge and get a little closer, like roll over, perhaps. Now, here's the thing, guys, gals, peoples. You know, I'm a big fan. This is one of my favorite things to use. Volume at price indicator, right? Forget about volume at time, which is your traditional volume. Volume at price. I want to see where the battle has been. Where's most of the money come out? Now, this relates to, you know, market profile and volume point of control and intraday trading and day trading. But the same sort of principles kind of apply here. So based on this, I'm looking 156s as a support area for this. That's just north of this 50-day moving average, or just south of the 50-day moving average, rather. So when I'm looking for areas of potential support here on the chart, I'm talking a $1.56, $1.55s, right in here. 156, 155. If you notice, nice little shelf, 155. So 155. Now, granted, that's a little ways away, right? With Apple trading all the way up at 166, it's quite a ways away. But if you notice, Apple has this tendency to just kind of, you know, float and then shift, and then float and shift, floating, trickling, shift. You know. When the moves come, they move pretty quick, but it's just like a series of shelves or stairs or whatever, right? You can kind of see it. See? Boom, 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 boom. All right. So I think 155, definite support. 50-day, also support. I'm going to say this high, intraday, we're going to get into it, right? What's this high? 164.94. What's the low today? 165.28. So 165 essentially is a new short-term kind of floor. Now, if this wasn't an earnings day, right, I'd be saying, okay, we just wait for next time it hits $1.65 and we go ahead and go long Apple. But it's an earnings day, my friends. So, you know, earnings has a tendency to break these levels, right? Just karate chop through them and break them. Because there's enough strength, there's enough liquidity to be able to push through these levels. Okay, so just giving you an idea, sort of the support gradient that we have here, so to speak, right? All right. And then resistance to the upside, because we're in no man's land, we could draw fibs, right? Even just over the short term, or we can go from this move. We could draw that fib. I like this fib. This is a shorter shelf kind of thing. This would be for a little bit of a quicker kind of trade, I suppose. If I drew the 76.4, I bet you'd be right here at the 50-day. But sort of this 160 area. Let's draw some extensions. So I'm going to do this to give us potential upside price targets. Not the calculator button. Can't press the calculator button. You got to press a negative button. Negative 50s, negative 61.8, and a negative 100. That's what I do. So you got $1.78, $1.80, $1.86 to the upside. Okay? So there you go. 178. I doubt they're going to be pricing in a $12 move on Apple, but without looking at the chart, there's no way. That just seems like way too much. I don't think they're going to be pricing in that much. Yeah, we'll see. All right. So you got your levels. Good. Look at some other things on Apple. Let's go back to these revs. I like to look historical revs. Man, you guys are quiet today. Everything good? Is everybody all right out there? All of a sudden, we were all talkative before. Now all of a sudden, it's all quiet. Hope you guys are still there. What about Dave? Somebody give me a what's up. Everything looks okay. All right. Let's look at these revs. You see this? Do you see this? 2019? There we go. See, there you go, Dave. Thanks. All right, we're alive. All right. Haja, haja, haja. All right. I get nervous sometimes. All right, so this is pretty remarkable. So last time Apple had a contraction in revs, 2016, and then 2019, right? So we got these. We've got these. Okay, good. Everybody's good. I'm glad. Remember, guys, there's a delay too. So then I talk, and then it's silence, and then I'm like, oh, everybody left me. We're gonna talk about chem at the end. We'll do it. Okay, 2016, 2019. All right, where we at? Boom, boom. So we got a little bit of revenue growth, but I think this is where it's gonna happen. Is we're gonna be looking towards this 2015 or 2018 numbers of 15, 12, and I think that's gonna provide a little boost for Apple here. I think that's where this market's looking, right? So think about Apple in 2014, right? As you're looking towards the 2015 numbers. And then, of course, it's all BANANAS over here, right? So this is why I like looking at this, too. So let's look at Apple. Let's look at Apple at towards the end of 2014, right? Let's do that. We could do that, right? We could do it. Apple towards the end of 2014. So towards the end of 2014 is when we were looking at... Wait. I got those numbers wrong. Hang on. So we're looking at 2017. Here we are. Yeah. No, I got that right. Okay. End of 2014. Look at that. They did start looking. You see that, guys? End of 2014. There was the beat. And then they had their eyes on the prize, my friends. Of course, this is while these estimates were just trucking along. But I think that's what you're going to get here. Okay. So that's good. Do we want to look at EPS? Probably 8, 9, 21, 8. Look at the same thing was happening. 2014 into 2015, they knew we were going to have big EPS growth. You had that also. So we know we got decent EPS growth. And again, economies of scale, right? These guys just get so big that these percentages are just mind-boggling. Let's look at some valuations. I like this little wrinkle we've been adding recently because, frankly, they matter. Pretty good stuff here. Hey, guys, did you know that Apple is trading at a discount to the S&P 500? What? The Apple PE is trading at a discount to the S&P 500. Now, part of this is probably because Apple has $1 bazillion in cash on the sidelines, and people are like, yo, bro, why do you have so much money? You're just chilling. I think that's what it is. That's my quote of the day, by the way. Yo, bro, why do you got so much money just chilling? Brilliant. I can see that headline on CNBC right now. Yo, bro, why do you have so much money chilling? 15.21 times earnings on Apple. That's the valuation we're looking at right now. While the S&P, man, this number creeps up every single day, doesn't it, guys? I feel like this has been, and it has, 18.68. But Apple's at 15.21 times earnings. Does that surprise anybody? You know, how did they go from trading at multiple and then all of a sudden down? I read another, speaking of CNBC, I saw a tweet about an article, and they were saying that Apple is a luxury brand like LVMH, which I kind of laughed at. for a second. My girlfriend started working at LVMH, by the way. She's very proud. I'm very proud. It's good. I'm a kept man now. If she could just keep on creeping on up. Creeping on up. Okay, so valuation-wise, Apple's getting richer, but you're right about where you were in 2014. Okay? Which should be a good thing, guys. We keep drawing this parallel to 2014. And we know that the stock performed well in 2014. We also know they were looking forward to another cycle. I'm guessing, actually, but I'm pretty sure if we looked at the historical articles on it, I bet you that's what happened. I don't know exactly. I guess should I be embarrassed that I don't know exactly what cycle Apple was in 2014? Maybe I'll make a nice, cool little chart about that in the future about an Apple cycle thing going on. We shall see. Okay. Price to sales. I think this is going to be even more comical. And that is probably at an even deeper discount. But it's not. Oh, that surprised me. Surprising. So look, when you look at it in terms of price to sales, it's actually a little richer than the S&P 500. So I think we found the answer to the question there, Dave. Apple's always been too cheap, not from a price to sales standpoint, and the PE's at a discount, right? Okay? Right? Okay? Because when you're looking at the growth, I think you're factoring in the $1 bazillion, bazillion, maybe there's one Z and two L's, bazillion, or is it buzzillion? I don't know how to spell bazillion. 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 The $1 bazillion that they have just sitting in mattresses inside of iPhone cases stacked up around the iPhone, the new Apple Office, just in circles around them. And maybe that's why the PE's at a little bit of a discount. Oh, the CNBC guys are now talking about Apple. It's funny. Why do they always come in here talking about what I'm talking about? I gotta talk to these guys over there. Which, by the way, I've never done CNBC. I'm a little miffed at that. I'm not gonna lie. What about Dave? Bloomberg all the time. Well, not since I've been back, actually, but I've been on Bloomberg lots of times. I used to go 2, 3, 4 times a month. Never done the CNBC. Or Fox Business News, for that matter. I've done Canadian Business News Network. I did CCTV, this Chinese thing. Never CNBC. What about Dave? We need to start a campaign to get Dave on CNBC. Pete Najarian retweeted me the other day. Okay, come on, Dave, get it together. Nobody cares about this. Okay. So what does this all mean? What does it all mean, Dave? It means Apple's not totally undervalued here. Nor is it overvalued. Right? It's fair value. And now what we're looking for is what's going to happen out of this report moving forward. Now, the key number of this report, guys, for Apple is going to be about the margins. Okay? It's about the margins. 38.5% is the number you're going to want to listen for. If it's above that number, it's going to be good. If it's below that number, it's not going to be so good. Okay? 38.5 on the margin. Now let's go ahead and do the fun stuff. Let's look at this options chain and see what's going on. So overall, guys, I guess if I was a long-term shareholder, would I be adding to Apple after the earnings report, right? Or before the earnings report or whatever? I think I would, because I like the overall trajectory of these estimates, and we've got another iPhone cycle coming, and the valuations are pretty decent. So yeah, I think I would. But specifically to what's happening, the main event, how should we trade this? 167s, so we'll do 167.50. And these guys are reporting after bell today. Oh man, boy, is this going to make for a fantastic Friday session. I'm going to tell you guys right now, right off the bat, okay? Before I start, and I know this is kind of funny to start digging through this, before I start digging through this, with a company like Apple, that's going to have, we're going to be able to trade this tomorrow on weeklies that expire tomorrow. I think that we should just allow the event to pass without us messing with it. I know that sounds funny, but I think we should just let it go, and then tomorrow morning we should get our claws out, sharpen our claws, and start playing after the open. 167.12. I just wanted to refresh this, guys, because it. You'll see why in a second. Now, granted, I do have a little bit of a delay here using just bar chart, but this is to give you a vague idea. So 284 by 288 is what the at the money call is going for. That's 286. Now the at the money put, 445 by 455. We're going to call that 450. So the market's pricing in 736. Talking about 4.39% is the move that they're looking for. So $7 holler, 4.3%. So that puts us here and here. So the 160 to 175 range. 160 to 175. Wild Bill points out, I see, Wild Bill, I like it when you're here, man, because then you throw out calendars and you get other people thinking, and it's great. So Wild Bill likes the calendars. So that means you could short one of these. You short, in this front week, and then you buy a little further out, and it costs you nothing, which is great. Let's go back here and see what has been the move in Apple on previous earnings reports. Silas, what is Apple Care? Does Apple care? Oh, is that the health thing? That's the health initiative, right? That they're talking about? This is their new thing they're going to roll out? Whoa, yeah. That's their whole healthcare thing, right? That's not a bad idea. They want to revolutionize healthcare now, right? Or is that Facebook that wants to do that? They probably all want to do it. Earnings. So remember, this is 2 days before to 2 days after, which means nothing when you're talking about 2 hours before, but that's okay. June, 5.6% move. 5.6. March, nothing. Quarter before, 5% move. September, -1. Then 5s. Then negative. Subscription insurance on Apple product. Oh, what's their healthcare initiative called? What's their... You'll need to learn how to pay nothing. Yeah, right? I hear you. That's good. I like that, Bill. You're right, too. You're so right. God, you're so right. Last time was a major downturn was basically March of 2016. What's their healthcare initiative? Maybe I'm getting crossed up. All That's the funny part about these live things. I have these brain farts, which happens often. Silent but deadly. And then I don't have anyone else to talk to. I'd love it if we got to find a way to just get you. Maybe we'll do Discord and you guys can all start chiming in. I'm telling you, we're gonna do a funny thing one of these days. We're gonna switch it up. Yeah, that's their Apple Day keeps the doctor away. All right, so yeah, they don't move a lot, right? They haven't moved a lot. It's been a while. Okay. Okay. Back to the charts, the bar charts. Go to the monthly. Stacked. Stacks. I'm talking stacks. Now, this market's only pricing in a $7 holler, right? So, one way to play this, gents, selling these out of the money call spreads, if you're bearish, or even if you're not, right? If you're just saying, 175, you know, what's Apple gonna drop on us that's gonna cause it to really rally up? And remember, NASDAQ was under pressure. Hey guys, how much we're going off to the races. I'm gonna say it right now. Watch Alibaba get back to the highs. Watch. Let me tell you. Watch what happens to Alibaba throughout the course. I bet you Baba rallies the rest of the day. I bet you. And Apple's about to get on his horse too. There it goes. There she goes. It's going to the highs. That's it, guys. You guys had the dip already. Load the boat. The bulls are out. The bulls are out there. They're bucking. The bulls are bucking, my friends. I don't know. I just feel it. I just sense it. I can just sense it right now. Anyway, so selling these out of the money call spreads. If you're bearish, let's just look at what that looks like, right? So let's say you're coming in here and you're saying, you know what, man, Apple. I just don't think Apple's going to get through to new all-time highs and keep pushing higher. I just don't think it's going to happen. So one way you could bet against that, just selling an out-of-the-money call spread. So this 175, 177.50. And let me show you what kind of risk versus reward you get on that. Okay, again, guys, lots of new faces here. If you, well, good. I'm glad. Let's hope. 175 call. You're going to sell that for 133. This is the November 17th. November 17th expiration. Now go ahead and you got to buy yourself some protection just in case this thing skyrockets and keeps on going to the moon. So you got to buy the 177.50s for 93 cents. So your net credit is going to be 40 cents. Now the most you can lose is 250 minus that 40 cents or 210. So you can make 40 on 210. You can make about 19% on this trade. Now a lot of you guys are going to look at this and say, man, 19%, it's just not worth it, especially given that I've got, you know, a $2.10 at risk. And that's fine. You got it. I'm not here to tell you if this is good enough for your risk profile, but a lot of people ask me about these credit spreads, and that's what they say. And then the more you can get more conservative, obviously, by going further out. Okay, further out you go, the lower likelihood there is of your trade losing money. Okay, so what do I mean by that? I mean you could go look at this, and I'm just showing this for illustrative purposes. So the further out you go on these short call spreads, further out of the money, the less return you're going to get, but the less risk or chance of you losing your money, right? So if you sold the 187.50, you're going to get 23 cents of credit. Simultaneously buying the 190 is going to cost you 17 cents. So you got a 6 cent net credit here, right? And you got $244 at risk to make 6 months. You only make 2.4%. No, I'm not telling anybody to get out there and do that. I'm just showing you from an illustrative perspective. further out you go, further out you go, the less attractive it becomes. Okay, the less return you get, but also the less risk of you losing money. But if you do lose money, you could potentially lose more. The great conundrum, which is options trading. Lots of trade-offs. That's my Dr. Evil laugh, or Austin Powers laugh. I need that. You know what? That's what I need. I get the Austin Powers when they're laughing about the guy, like, he had a good head for management. I need to bust that out. Okay. So the Bears can sell this out of the money call spread. Okay, so let's do this. Bear debit. Sorry, it's a Bear credit. Short November 17th. 175, 177.50. This is 2 weeks though, Bill. This is 2 weeks. Don't go cheating. Don't go cheating, Bill. So 60%. So 60% a year. But when you say it like that, but that's the other thing though, Bill, is sometimes you're gonna lose though, so you can't. I mean, I hear you. Anyway, Bear credit short November 17th, 175, 177.50. Call spread for 40-cent net credit. Okay. Now the Bulls could do something similar too, with more conservative Bulls, right? 175s. Was the upside and 160 was the downside, right? Now, guys, I don't know if you've noticed this, but does anybody see that the numbers seem a little bit skewed here on Apple, and there's more money on these downside? Not if it's a Condor, Bill. True. It's true, Bill. But the numbers are still different. Because you do it on one side, but then you lose it on the other side. Only if it goes all the way down. I don't know. This is a good philosophical discussion. All right. Bears. Bulls. Doubles. What a bull could do is sell an out-of-the-money put spread. So you're basically going to pocket the money of the people that are betting against you. Now, this is interesting here, that the 160 put is worth 226. And buying the 157.50 put, it's going to cost you 155. So here is a 71-cent net credit. Now the difference in strike prices is still 250 minus that 71 cents is 179. So you can make 71 on 179. You can make 40% on this trade. Just by going $7.50 out of the money. Bull credit short November 17th, 160, 157. Ah, no! I pressed enter too soon. Come back. Come back. Come back. Do this again. Bull credit short November 17th, 160, 157.50. Put spread for a 71-cent net credit. Okay? So the way that you profit of that is shares of Apple have to close at or above 160 at expiration on November 17th. Okay? Where's 160s? Where are my 160s at? Let's go to the daily. Give you some perspective. The 160, so here's this little high there, right? Before Apple gapped down to test 155. And then it rallied above that. So this was a little bit of a resistance. Rallied above it. So if it comes down to test that, you're south of that. Now you can be more conservative by going out to 155, right? And you're going to get less money. Less of a return down at 155. But I'm going to show you that 155 just so you can see what I'm talking about. You don't have to take my word for it. I'm not a crazy man. I'll just show you. So if you inch it down even further, selling the 155 call, you're going to get a $1 holler, my friends. Buying the 150 puts, Jesus, Dave. Why don't you just confuse everybody today? Bulls selling 155 put, you're going to get $1. Simultaneously buying the 152.50 put, you're going to give back 62 of those cents. So 38 cents is your net credit on this one. Difference in strike price is $2.50 minus that 38 cents is $2.12. So you can make 38 cents with $2.12 at risk, or 17.9%. Okay? So that, again, like I illustrated before, you scooch it further down. This is tucked away on the other side of a different support level, and then a net credit. And that's what you can perhaps pocket. Now, what you can do, like Bill was talking about, what about these condors? So a condor is going to happen, an iron condor, you're going to sell an out-of-the-money put spread and an out-of-the-money call spread. Now, famously, we got punched in the face with a Google condor in earnings, right? But we're at 127 is the top end. So we're actually not, it's not the end of the world yet on this Google one. And I'll get back to that. But here, looking at the Apple, if you were doing this 155 to the downside, you're still going to get this the 38 cents, right? More conservative. So then if you went 10 bucks out on the upside, that puts you up here at the 175. So if you do the 175 here, that's another 40 cents, right? So you can get 155s. Another two bucks. We were supposed to go to 177.50. So you do the 177.50, 180, that's 30 cents. So what will happen is, oh my goodness, the calculator is going to take over the screen. $0.68 would be your net credit on that condor. And the most that you could lose is $2.50 minus the 68, or 182. So then you kind of double up, right? Because you can't, there's no way you could lose on both of those simultaneously. But you could win on both of them if Apple stayed between 177.50 and 155 at expiration. Okay? I should be at 180 though, right? 12.5. You guys noticing that the puts are a little bit more expensive than the calls on Apple? I'm thinking it's just protection. There's just a lot of protective puts that get bought against Apple to the downside. These are all speculative, probably a good chunk of these. Speculative call buying, protective put buying. That's what I'm thinking. I don't know that there's too many people writing calls out here for income. Maybe there are, actually. That's got to do with some of it too. Yeah. So you guys understand the dynamics of that sort of line of thinking? So let's say you're an Apple shareholder. You're a huge Apple shareholder, which a lot of everybody is, okay? A couple of strategies that you got. Strategy, you're going to sell calls for income, right? So you go out of the money into a place that you don't think you're going to get called away, and you sell it. You sell the call, you get a little extra income, boom. When you've got that much more selling pressure, it's going to drop the price of these call options overall because there's so many people willing to sell. On the flip side, on the puts, you have long-term shareholders that want to protect their position heading into the earnings report. So they go, well, if Apple goes below 150, I want to make sure that I'm protected, and they buy these puts. It's very cheap. And then if Apple does have a situation where it crashes down a lot, this is insurance essentially. So you have a lot of people coming in and buying puts, which is going to inflate the price of these puts. Okay? So that's why this dynamic. And in a lot of cases, people sell out of the money call to finance the protective put. Okay? Because it's basically risk-free for that. So let's say you got 100 shares of Apple at $167.50, okay? And you've had it for a little bit, right? And let's say that your cost basis on Apple, you bought that for $150, okay? And you don't want to lose any money. You're like, man, I'm up a little bit, you know? I'm at $167.50. My cost basis is $150. I really don't want to ever lose on this Apple trade. So in order to protect your $150 or your 150, times 100, right? You're going to say, okay, I'm going to go ahead and buy that protection. So you're going to buy that protection out there, and it's going to cost you, where was I? 150s, 37 cents is what that protection is going to cost you, okay? So you can come out of pocket 37 cents for every 100 shares you got. Or you could say, you know what, is there a way I could finance this 37 cents? Sure enough, what if I just sold the 182.50 call? What that means, if Apple trades above 182.50, they're going to call my shares away from me, but I don't care because I bought the stock for 150, so it'll be a nice little gain. So that's scenario A. Or scenario B, Apple crashes. Then I have the 150 put, which will provide protection on the way down, so that's fine. And if Apple stays between 150 and 187 or 182.50 at expiration, I'm just going to keep the money anyway. I'll keep the money and I'll keep the stock, so I'll be good. And you make a little bit of profit because that's 45 and that's 37, so that 8 cents. And then, of course, there's transaction costs and such. But so that's what people do, okay? And if you're holding a long-term position in something along the lines of Apple or whatever other stock that you got, that's a decent strategy that you guys could use on a long-term holding that you have if you're worried, coming into these earnings reports. It's also a chance to make a few extra bucks because since you're long the stock, you don't even have to, if you say, I don't even care, about protecting myself to the downside, you can always sell these out of the money calls and say, well, if it spikes up, I'll be happy, I'll be out, no problem. And you keep doing that quarter over quarter in these risk events, it goes a little bit out of the money, you're going to be able to create a little bit of extra income stream for yourself. And you want to do it as it's getting close to this report and this implied volatility number spikes. And you can keep on notching some victories that way, okay? All right, so overall, guys, what do I think is going to be the trade that pays? And if you notice, I didn't even put a vertical. We didn't do a long vertical spread on these because I don't think it's the way to go. I think with Apple, the bull credit is the trade that pays. That's pretty good because what you're doing is you're taking advantage of all those people that are out there buying those protective puts is basically what you're doing. And you're saying, okay, give me that, I'll take that, which is good, right? And then still in a bullish direction. Now, Jack, I think the smarter idea is to just wait till tomorrow morning and then roll the dice on something that expires like in 1 week, right? That's like the real lotto play. But ask and you shall receive, my friend. I am not going to deny you a lotto play here. So this is very high risky business stuff. In the event of something spectacular happening, what's going to end up cashing out? Now remember, we've had some remarkable things that have happened this earnings season. So you can do. Oh man, Bill, you're just getting me all day today. Ugh, the collar. I like it. I like it. That's dirty talk. Now you're talking dirty to me, Bill. So Amazon, right? Who'd have thunk that a company as big as Amazon would have had the quarter that it had and the jump that it had? Just spectacular. So you don't think Apple wants to get in on a little bit of that? You don't think they're a little bit jealous? Like, oh, what the heck? So, I guess in the lotto direction, would you guys say 175 calls? And then you'd have to say 175 and up, I guess. And then these puts, maybe the 160 put, I think. I think those would be the way to go. Jack. So 175s are going to cost you 74 cents. I think that's a bullish lotto ticket. The 160, see, this is going to be more expensive. That's the problem with these puts. These puts are just too expensive. So there's your lotto, Jack. I say the lotto is the November 3rd 175 call for 74 cents. Yeah, Facebook killed it, sold off. Something's last night. There's something's in the water right now, right? Something's goofy. Yeah, I think people were put off by the oh hey, we're not big enough to handle this Russia thing. I think that might have put a few up. Chris, is that November 3rd? I gotta do I have to Chris, are you looking at the 3rd or the 17th? Let's look at this. And granted, there is a delay here. I'm talking the 3rd for these much riskier plays. I think the 17th is probably $2, right? Yeah, I don't know what you're looking at, buddy. Unless I've got unless this data's bad. Yeah, no, Chris, we're talking it's November 3rd. November 3rd on this lotto. Yes, okay. All right, guys. I'm not going to leave you hanging. We got some questions. Bill wants me to look at Kemet. Okay? Chris, you asked about Kemet too, right? Both you guys asked about Kemet? Now, first of all, that's weird. Why is it that? Why is my data that wrong? I'm upset about my data being wrong. Dailies. Kemet. So I would just like to point out do not adjust your screens. This stock was at $3.80 before Election Day. And then went to 27. And then they didn't like this report. So there's a couple of things here. I like my volume at price, you know I do. So there's a lot of gaps in this. And one of these gaps is kind of where it is now. So that's why these stocks, so once you're past this level, right, and it did, see how it gapped down? So when you gap down, so look, first of all, right off the bat, bad report, where's the volume and liquidity going to be? It ain't here. Nobody was here. It's going to be here. This is the first step. This is the first step. And then there was so much selling pressure that didn't even help. So once it got below that level, there's a gap here too. So this was the next level. So that's where you're fighting right now, okay? There's a battle happening there to see if this is enough liquidity to stomach that. And then the next step after that is down here, which I doubt it gets to. Now this is the initial shock, right? So what's this number? Basically spot on where we're at. Now I'm going to go intraday. And you can see exactly what I just said. The gap down, looking for liquidity, not there, creeps up, looking for liquidity, the buyers are here. Buyers are in here. They're here, man. They are here. Okay. Now, if more selling pressure comes in, the rest of the buyers... See you later, Wild Bill. You're hoping that the 200-day provides support, but basically no one's ever traded with it down near that 200-day. But look at this. See? Tipping. So I think if the selling pressure continues, that it would subside near the 200-day. It looks a little overcooked to me, though. This looks overcooked. So basically, the only way you lost money on this is if you bought it after August. So if you bought this before August, you're good. If you bought it since August, maybe not so good. Okay? If you're one of the guys who bought here, sorry. It's going to take a while for you to get that back, I think. And this is not me reading the report. This is just looking at purely the technicals right now. So there is some support right here where the stock is trading. But I think this 200-day is going to be rather tempting. So I think it gets down to there over the course of the next couple of days, perhaps. But the buyers are here. And personally, for a guy like me, if you're looking for a stock to buy and you didn't want to buy it at 27, as long as nothing's fundamentally changed about the company, I mean, it's a funny line, but if you liked it at 27, you love it at 17. If you're on the sidelines, you haven't bought it yet. So I'm going to take a look at this stock and say, hey, maybe, because I had this pop up in Momentum Trader a couple times, and I just didn't want to chase it. It popped up here. It popped up here. I didn't want to chase it here. I should have. I absolutely should have. But I didn't. So this would take a whole nother video breakdown to do. Which we could do, guys. We don't always have to. I've decided as the czar of Live Trader that we don't have to do just earnings reports. That we can just do like the XYZ stock breakdown, you know? And then just do this whole thing minus the options whenever, right? Whenever, on whatever, and however we want to do it. So there is my Kemet story. Looks like the buyers are here. I'm going to look at if there's some kind of fundamental change to the business that's occurred. So the buyers are here, but there's still a gap here. And then the next round of buyers is in here somewhere. 200-day down here. So there is some more downside potentially. Intraday, it looks like it's bid. I think it hits the 200-day though. Okay? There's my Kemet. Yeah, we got to get in the chat to talk ATVI and OLED and all sorts of stuff. Yeah, that's good. What's going on here? What is Google popping into my head? Get out of here, Google. What else? Let's look at Tesla real quick. You could use the same sort of analysis. Look at this. There's a gap in here. So you got a gap down. This is not good. So Tesla has broken the 200-day. You see I got a big fib here. Does it go below 290? It could. This is the problem. The delays in the Model 3. They don't want more delays. But you got to know how Tesla operates. Elon Musk sets very aggressive targets, and then they disappoint. That's what happens. That's how the company operates. Okay. And the other thing I want to talk about here, with regards to Tesla, is Tesla is not a car company. I just boom. If you think Tesla's a car company and you apply the same valuations that other car companies have, you're going to lose your mind. You're going to go crazy. Tesla's not a car company. It's an energy company. What? Yeah. It's an energy company. And the guys that are paying $300 a share for it know that. It's actually a pretty interesting story. I think it's a great plan. He's building out the electric car charging infrastructure. So he starts doing that, and he stimulated demand for it by making electric cars and then giving away all the ideas on how to make electric cars. And now guess what's happening? They're making electric cars. Like the big car brands are making electric cars, so now he can focus on the infrastructure network. So Tesla's not GM. Tesla's GM plus ConocoPhillips, plus ExxonMobil. So if you own the gas stations and you made the cars, now what's your company worth? And that's how you got to look at Tesla. That being said, from a technical perspective, it's getting soft in here. They're trying to fill out some of this. I think, yes, absolutely. It could get down below. It could get to 282 easy because that's a 50% retracement. So that's what I would keep an eye on. All right. Priceline next week. Yeah, why not, right? We like talking Priceline. The options are all over the place for Priceline. And got a nice little chart coming down on this 50-day. Whenever they report, I'll figure it out. Vladimir, thanks for chiming in here. And there you go. Okay, so I'm going to leave you with this. Another hour. Wow, I'm going long on these. Tomorrow, we will do the morning after. I'm not going to leave you guys hanging. And the morning after is more like this little session at the end where we're just asking questions and we're going back and forth and blah, 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 blah. If you're not already hooked up, man, live, trader@zax.com. Get on that distribution list. I had 4 or 5 people yesterday ask me to do it, so I got them on there. And then, like Kurt has pointed out here, we're going to be in the chat room on Discord. Discord.gg/little p big BWCM little s big G. I know it's stupid. It's a stupid thing. You know what I'm going to try to do? I'm going to try to get the redirect, because we have redirects that I can put on Zax. I'm going to see if I can get them to do something for me, actually. That's a brilliant idea. Okay. To make it just look cooler than that. So I'm going to work on that. But Kurt's in there all the time. Hefe's in there all the time. Trevor's there. Lots of people. Dave's there. And if I forgot your name and you're in there, I'm sorry. It's not that you're not important. It's just that I am rattling off a lot of names. Okay, guys, that was a very long session. I'm sorry for keeping you so long, but again, you can feel free to turn me off whenever you want. Tomorrow we're going to do the morning after Apple, so we're going to try to find some quick trades that you can do next morning, a fade, something like that. We'll go from there. And that's it, my friends. So thank you so much for your participation, for hanging out, for your patience, for your questions, and I will see you all mañana. Have a good day.